Let's also bring on board Chakri Lokapriya, CIO and Managing Director at TCG AMC. Hi there, Chakri. Good morning. And clearly, we are looking at a fairly strong uptrend in the equity markets. You believe that this is going to continue up until the election event. And how are you looking at the overall valuation picture, particularly when it comes to the broader markets?
Good morning. Yes, I think, while today you might have some weakness because of the US situation, it's actually good for the Indian markets because the weaker dollar is actually good for Indian imports. It's also good for mid-cap companies which have a good amount of the raw materials which they import. Second, mid-cap valuations, as we know, are still trading at a nearly 40–50% discount to their 7-year average. So from that perspective, there's still some catch up to do, and earnings are reviving. So against this backdrop, and furthermore, with the Fed not going to raise interest rates in 2019, leaves the room for RBI to cut interest rates in April, which is again positive for the mid caps.
Okay, that's the view coming in right now. But let's understand at this juncture how you're looking, Chakri, at the prospects for the auto space. It's a time like this that we are seeing a lot of the automakers in the slow lane. They have acknowledged the fact that there is rising input prices, and we have seen the February auto sales numbers that haven't been all that encouraging. Today, Tata Motors is going ahead with a price hike. Is this a compelling space for investors to continue to have faith and remain invested in, or is the long-term story looking a tad bleak for autos?
Well, the long-term story looks fine, but in the interim, I think for the next 6 months or so, auto sales are likely to continue to be weak because A, liquidity continues to be tight, B, there is a huge amount of inventory, about 2 months of inventory. 3, as a result of that, they will need to cut prices probably 20–25%, which will again eat into the margins. Yes, auto stocks have corrected a fair bit in the recent past, but I still think because of the margin pressures, we are likely to see the stocks, tread water with no upside, at least for the next 6 months or so.
Okay, 2 minutes to go, and if I look at the basic market, the market clearly is in a mood to reward all the corporate banks. Yes Bank, Axis Bank, just about anything and everything which has got to do with the corporate banking space. I think that has been on a tear. Chakri, do you track NTPC up 11% this year?
No, I don't track NTPC, but it is quite an what you call undervalued stock, and I think they will benefit from some of the NCLT things and power in acquiring some of the troubled power assets. So I think it's a good buy at current levels.
Those are on the Nifty this year, and again it's a very myopic and a very short time period. Is actually Mahindra and Mahindra. Despite not so rich valuations, Tech Mahindra is doing very well. They've had a couple of launches in their CV segment also. The management of Mahindra and Mahindra has not been that bearish in terms of where they think the world is headed and their businesses are headed. The stock is down 16%. Hero MotoCorp is the other one which is down by about 12.5%, and Z Entertainment down 10%. Chakri, some would argue that the deal for Z just around the corner, at least that's what we understand from sources. The stock has seen what really could be called as an absolute roller coaster ride. It was nearing 450, 460, came crashing down on that ugly Friday. From there it has recovered, went all the way to 450, 470, and now struggling a bit. Would you buy Z with the assumption that a deal is around the corner?
Indeed, I think a deal is probably around the corner, and second, a lot has been made of the threat of digital impact on the media companies, Z included. But I think there is a huge value in the franchise because it is a content provider and it's also expanding into the digital space. So against this backdrop, whether it is Sony or XYZ, there is a huge amount of value creation in the franchises of Z, and therefore yes, it looks attractive at current levels.